Listen, the structural problems or the lack of growth that we've seen in Europe and in Germany is not something that people were not aware of. And many of the reasons that have led us here were also well known. Now, the good thing about it is that in the past week, we've had a seismic change within the European framework, and very bold and swift decision hopefully would allow us to get to a place where on the medium to long term, we get back to a growth element. Now, obviously, on the short term, we still have some of these headwinds which are part of the equation, but what matters for the equity market is where we sit relative to both positioning and estimates. Now, I sat here back in December, and we were advocating for being actually contrarian long European stocks versus US. Not a lot of people were sympathizing on this view. Right now it's becoming a lot more consensus, and the main reason back then was positioning was too extreme, but also estimate and pessimism in Europe was so low that the bar to surprise was actually quite easy, and that's what happened this time around.
I love the explanation, and we saw it in Davos too, that we had so much moaning over the course of the week and that Europe needed to get its act together. And we're hearing more and more from European commissioners that in fact was the case, and we spiral forward to events today, and of course we've had a German election too. You call this Merz's whatever it takes moment. So this is Merz doing a Mario Draghi.
Yes, I think it's a European whatever it takes moment. We are revising a lot of our forecasts, but definitely the speed, the number and the stimulus that's being announced were quite bold, and I think ahead of anybody's expectation in that respect. And I think the sentence you were referring to is a French economist and one of the founding fathers of European integration, Jean Monnet, that once said Europe was built during crisis moments. And I think the Trump administration, or potentially the situation in which we are also with the Ukraine-Russia situation, has allowed us to react a lot quicker than we would have normally, as Europe does usually.
We've clearly seen investors getting on board with this theme, this narrative that Europe is now on the brink of becoming great again. This, mega slogan has been hitting my inbox over and over again in the last few days. You clearly were early to the theme. But where are we in terms of that realignment from an investor flow perspective? How much more money is there poised to come into Europe?
Well, I'm going to pick up on what Karen said a minute ago. There's the short term and there's the medium term. On the medium to long term, if you look at both valuation discrepancies between the two continents, and if you look at allocation, that would say there's still a lot more room to go. The outflows that we've seen in Europe over the past 2 years have been quite large, and the past 2 months or even the past month has seen some of that convergence back again, but we're still very far from it. Now, I have to, on a very short term technical, I'm a student of the markets, and the student of the market tells you that potentially we've overshoot quite very quickly, and even with all of the news, Euro Stock 600, which I see in front of my screen, is still down on the week. So I prefer to remain a bit more cautious and allow the momentum to continue to pick up before we actually surf that wave, which is positive on the medium term.